Okay, hey guys, thanks for coming. Thanks for taking some time off. We'll be beginning our webinar, so let's not wait any further. So if you guys haven't been catching up with the US market, just a quick summary. Right this month, there is actually a few banks, suffering from the quantitative tightening from the Fed. So that's something to watch out for. And then they are actually buyout from all the other big banks. We see one of it is actually Credit Suisse. Although the share price is still there, I believe the bonds are greatly affected. And then we also have the Silicon Valley Bank. Silicon Valley Bank is actually supported by First Citizens, so the buy over was actually quite huge. If you're still interested in what's going on, I believe there are some key events that you have to stay tuned. One will be the PCE report at month end. And then of course, there's the two other common report, which is the CPI report and the interest rate hike by Fed upcoming next month. But that's just a quick summary. Today we'll be touching on the basics of options trading strategies. So we're just gonna go through at a very fundamental, very surface level. So if you are actually a proficient options trader, do stay tuned to what we have in stock at the last segment. So okay, so I'm Xiong. I'm the UK equity dealer right here. We have Justin joining us. He's our options specialist. And then we have Ying, who is our TA specialist. So at the end of this webinar, close to the last segment, Ying will be actually going through certain ticker codes. If you are interested, if you have any counters that you are looking for on the technical analysis, do post it in the chat box. And of course, if you got any questions, post it in the chat box. We will try our best to take a look at it and answer your questions. So let us begin. So, all right, okay. So this is the table of content that we'll be going through. Very simple. What are options? Feature of options, contract, type of options. So I believe maybe some of you or many of you have actually touched on this before, but some also not sure what they are. So we'll be touching on option chains, option grids, 4 basic option strategy, and of course, last portion of technical analysis provided by our technical specialists. So moving on. Okay, what are options? Options are financial derivative. They derive their value from underlying securities such as stock, as mentioned. Of course, there are other options as well. There's future options, there are FX options. So there are many different types of options. But solely today, we're just going to focus on the stock options. In short, you'll be hearing this a lot. Options actually gives the buyer the right, but not obligation, to buy or sell an underlying shares upon an agreed price and date. So you'll be seeing this definition a lot, and you must be wondering what they are and how it works. But I'll just give you a simple analogy, which is this. Very cute cartoons here. So what are options? We have in an options transaction, we need to know that there's always an option seller and a buyer. So this transaction will go through between these two parties. I would say a very good example would be, think of it as an insurance agent. Let's say the seller is an insurance agent trying to sell you this insurance to protect your house from fire. And then here we have the options buyer will definitely buy the contract, the options or insurance in this case, to actually protect your house from fire. And in this case, you will actually pay a sum, and this sum in options is called premium to the option seller, and the option seller will actually gain this premium from you. So they'll hold this sum that you paid them for this options contract. So now you have the right to actually protect your house in case of certain condition. So let's say for this case, if your house catch on fire, the seller will have to be obligated to actually reinsure you or maybe reimburse you for the damage that the fire have done to your house. So as simple as that, options is something similar. So there's always this seller who will gain the premium, and then the buyer will get the rights to the contract, and that's how it works. So without confusing you guys further, let us move on. A feature. So let us talk about features of options contract. There are usually quite a bit of features, but we're just going to touch on the four main features. So first will be the underlying instrument. Usually in stock options, we have the symbol. So it can be Apple, it can be Microsoft, and all the ticker codes. Then after that will be the expiration date. So similar to insurance, like you have to pay your insurance every month, every year. Options is the same. It can be weekly, monthly, or even daily, depending on the underlying instrument. And then, of course, the type of options, basic, just calls and put, which we will go through later. And of course, strike price. So the price to actually buy and sell the underlying shares. So type of options, let us talk about calls. Calls give the buyer the right, but not obligation, to buy the underlying shares from the seller at a strike price before the expiration date. So like I mentioned before, you'll see this definition a lot. Basically, the options will give the buyer the right. And then in this case, the insurance agent who sold it is obligated to sell the underlying shares at the strike price. So usually the contract options will have this specific strike price, expiration date. So with that, the buyer and seller will have to make certain transaction. So let us move to puts. Puts gives the buyer the right, but not obligation to sell. To sell the underlying. So if you look at calls, it gives the buyer the right to buy. In puts, it gives the buyer the right to sell. So moving on, we'll talk about the moneyness of options. These are just certain lingos that you will use when you go about in options trading. In the money, out of the money, and at the money. In the money is basically let's say money options that have intrinsic value. So let's say I have this contract, Bank of America. The strike price is at 50, and that now it's a call option, and that if the current underlying Bank of America is going above 50, so my options is actually in the money. So outside will be, if I have a $70 contract and the stock is going for 60, it's also known as outside the money. And at the money is, of course, closest to the strike price. So if the underlying shares is going about $50 and I have the contract strike price at 50, it will be at the money. So this is what we actually communicate across. So why options? Why do people trade options? Options basically gives you leverage. That's actually one of the main thing why people trade options. Usually one contract represents about 100 underlying. So if you buy a call, you have the rights to actually exercise this contract and gain 100 shares at the certain strike price. The second one, I think there's this mistake, it should be 2. So it gives investors more options, like the name prescribes. Options actually really give the investor or trader more options. You can do a lot of different strategies to protect your assets, or even earn more. But it depends on the market condition. So okay, so I'll hand over to Justin, who'll be talking more on the option chains and going through the 4 different basic strategies that we will be going through today. So stay tuned. Thanks.
Thanks, Xiong. Hi everyone, I'm Justin. Okay, let's move on to option chain. So in order for you to place an option trade, you have to come to this page called the option chain, where you see a lot of details over here. So I'll start from the top. We have the underlying share price and also the underlying ticker code, which in this case is Apple, followed by all the expiration dates. For Apple, we have all the weekly expiration, which expires on a Friday. And then we have the call option on the left and put options on the right, followed by all the strike prices in between. So as you can see, all the strike prices have their own option prices. So now I'll go through how does all the option price change related to all the factors. Hold on. Okay, so option Greeks. Okay, we have 5 option Greeks, which shows how do they affect the option prices. So for the first one is delta. So delta actually estimates how much does the option price change with respect to a $1 increase or decrease in the underlying asset price. So for call option, it will be between 0 and 1. And then for put options, it will be between -1 and 0. Moving on to gamma. Gamma estimates the change in delta with respect to a $1 increase or decrease in the underlying asset price. So for delta and gamma, it sounds pretty similar. So I will go into more detail in the next slide. So the third one would be Vega. Vega is estimating how much does the option price change with respect to a 1% increase or decrease in the volatility of the underlying asset. Next, we'll go to theta. Theta is basically telling us like how does the option price change with respect to time passing by. So as you can see, every option has their own expiration date. So your option prices would actually go down to 0 if on expiration date it's out of the money. Lastly, we have rho, which is the estimation of the change in option price with respect to an increase in interest rate or decrease in interest rate. So I'll go to delta and gamma. Okay, take note here, everything in this option chain is actually dynamic. So for this example, it will be static so that it will be easier to follow. So you take a look at the one inside the red color box. We'll be using the 165 call option for this example. So as you recall, delta is stating that how much does the option price change with respect to a $1 increase or decrease in price. So we'll be using 165 call option. And as you can see here, the bid is at $2.11. So we'll be buying that for $2.11. So this example, if we increase price of Apple from 159.14 to 160.14, the call option price will increase by the delta amount. So in this case is 0.31 over here. So for an $1 increase in Apple, your call option price would increase from $2.11 to $2.42. Okay, moving on to gamma. So for gamma, as you recall, is the change in delta with a $1 increase or decrease in the stock price. So since Apple has increased by $1, the delta, which is 0.31, would increase by the gamma amount, which is 0.03. So in this case, the change in delta will increase from 0.31 plus 0.03 to 0.34 as your sort of your new delta. So for your subsequent $1 increase in your Apple shares from 160 to 161.14, your call option price would increase by 34 cents, which is 2.42 plus 0.34, which is equal to 2.76. So that is basically how delta and gamma affect your option prices. Okay. Next, I'll talk about a basic option strategy. So I'll be going through 4 different strategies, which are long calls, long puts, covered calls, and also straddle. So on the graph on the right, it's the long call graph. We call it the payoff diagram on expiration day. So I'll go through the graph first, followed by this example on the left. So as you can see, on your y-axis is the profit or loss for the option contract, and the x-axis is your stop price. So your maximum loss for this strategy would be the premium that you pay to buy this call option, and then your maximum profit would be unlimited in this case, since stock can go all the way up to infinity, and followed by your break-even point here, which is how much the share must move to offset your premium that you paid. So I'll be using this example. You are buying a 100 strike call option at a premium price of $2. So at expiration day, your stock price has to be at least 102 for your option price to actually break even. And of course, maximum loss will be the premium paid, which is 200, since one contract represents 100 shares. And then anything above 102, you'll realize a profit. Next, we'll go to put options. Usually, we are long puts when we are bearish on the stock. So again, I'll go through the graph on the right. This is similar to a long call, whereby your maximum loss will be the premium paid, and then your maximum gain would be all the way until the stock reaches 0, followed by your break-even price here. So we'll be using the example on the left, where you're long a 100 strike put option for a premium of $5. So at expiration day, your stock price has to be at least 95 for the options to actually break even. And then your maximum loss in this case would be $500. And anything below 95, you will realize a profit. Okay, the next strategy is a covered call. Okay, so why do we do covered calls? When you have shares in your account and you are not doing anything with it, you can use these shares to actually earn additional income for your portfolio. So I'll do this side by side, so it'll be easier to understand. So we'll start off by, let's just say you purchase 100 shares for $150 per share. So since you have 100 shares, you can do a covered call position whereby you are shorting a 160 strike call option for a premium of $5. So this is your strike price. This is your stock price over here. So for this position, for your covered call position, your break even would actually be below 150 since you collected the $5 premium. So it will be the stock price has to be at 145 for you to break even on this position, as compared to a stock only position whereby your break even would be at 150, and anything below that you will incur a loss. So the only downside to this covered call position is that you are unable to participate on any upside move above the strike price. So for example, in this case, it's a 160 call option. So if on expiration day, your stock price, let's just say, is at 170, you cannot participate in that extra $10 move, since the buyer of this contract would already exercise this contract and you have to sell your shares at 160. So you realize the $10 gain from 150 to 160, but you cannot participate on the additional $10. Okay, moving on to the last strategy would be a straddle. So usually for this strategy, we are long a call and also a put at the same time. So we use this strategy when we are expecting a very large move, but we are unsure of whether the stock will go up or will go down. So example of this strategy used would be during, let's just say, equity earnings or before a FOMC meeting on the interest rate decision. So on the right, for the graph part, your maximum loss would be the total amount of the premium paid for your call and put options. And also your break-even price has to cover both the call and put options. And then you have unlimited upside and unlimited downside. Okay, so we have this example over here. We are long the 100 strike call and also a put option at a combined premium of $10. So at expiration day, your stock price has to be at least 90 or 110 for this position to break even. And then your maximum loss would be a 1,000 if the stock price stays the same at $100. So anything above 110, you will realize a profit, and anything below 90, you will realize a profit as well. So again, upside is unlimited profit, downside is also unlimited profit all the way to stock price of a 0. So that is all for the option strategy. We will go through more advanced strategy in the future. So right now, I'll pass this to Ying, my colleague, which she'll go through a technical analysis. So thank you, everyone. We'll be back for Q&A later.
All right, thank you, Xiong and Justin. Good evening, everyone. I'm Ying here. Okay, I'll be going through the technical analysis portion of this webinar. Okay, so before I go into the charts, right? Okay, I just want to share that for technical analysis, right? Basically, you can just use it across all instruments, okay, all asset classes, because in general, technical analysis itself is the study and use of price information for future. It's like anticipating how the price is going to move in the future. All right, so it's not saying that you use one technical analysis strategy on equities, then you have to change your style to fit into options trading. Okay, so without further ado, I will go into the charts first. Okay, so for the TA portion, right, basically I will go through Thng companies. Okay, then in Q&A, if you have any counters you want me to take a look at, I can go through a few. All right, but generally the context of the technical analysis today will be solely on options. All right, so let's take a look at the first counter. I will go to Meta. Okay, Facebook Meta platform. Okay, hang on, let me just change the charts. Okay, so in terms of getting the levels, right? Okay, strategy wise, I will be using supply and demand. Okay, so basically I will look at levels. Okay, use the resistance. Okay, basically the supply and demand will form the support and resistance. Okay, so I'm just going to keep it very simple. All right, drawing zones for you to identify where are the levels, which is resistance or support. Okay, then from there we will look at price action as to how the price will subsequently move towards. Okay, in anticipation. All right, so this first chart on Meta platform. Okay, what we are looking at now, right? Okay, let's talk about 2022 first. Okay, 2022 all the way downtrend. Okay, I think it's very obvious that we are looking at this huge downtrend all the way towards end of November. Okay, or maybe even end of 2022. All right, then subsequently in nearer term we are looking at this short-term bullishness coming in. Okay, why I call it short-term, right? Okay, because if you were to look out throughout this chart itself, okay, these uptrend movements, okay, they are still not breaking away from this 250 level. Okay, this was a very huge gap down level. Okay, from 300 plus to 320 all the way down to 250. Okay, but if we are looking at the current context, okay, current market situation, how Meta might be running in the near future. Okay, generally it's still in a range bound area. Okay, short-term bullishness. Okay, but as of the current price action itself is stuck in this range area. Okay, as you can see, this is from 170 towards the 200 level. Okay, so if you were to put this into, I say, how you can go into options with this, right? Okay, I mean, there's a few chain of thoughts. Okay, firstly, as price is currently sitting on a resistance level, okay, this supply area, we are looking at rejections, but price is still trying to hang above this 200 level. Okay, so a few things that you might look to do. Okay, firstly is if they were to make a strong rejection of this resistance area at 200, okay, we will probably see a price coming back down towards a 170, 175 area, okay, which is hang on, let me just draw the line. It's 170 towards 175 area. Okay, so with that in mind, right, buy put might be visible, okay, feasible, because buy put is for the bearish area. I mean, if you are looking at it doing a short-term bearish, right, you can get a short dated option, okay, for a long put in this context. Okay, so a long put, maybe you're looking at it for maybe a 1 month dated. All right, then with earnings coming out, right, we probably have some volatility to push price back down towards this range area. Okay, but I'm not saying that Meta is not, I mean, there's no probability of Meta going higher. Okay, of course there will be, but the thing is, for more bullishness to come back into Meta, I would prefer it to really hold strongly above a 200, 205 level. Okay, basically just sitting above this zone itself. Okay, because you don't want a case where, I mean, yes, they tried pushing higher, right? Okay, but as of now, you don't have a clear indication that price is going to continue this up move, right? So, I mean, a few scenarios that we might be looking at is they tap again, okay, then they subsequently come to a 230, which if you were to long call, okay, your strike would probably be at a 230. Okay, but of course, I mean, this is up to individual. Okay, personally, I don't like to put, I mean, if you want to put a strike straight at 230, I mean, it's your choice lah. Okay, but otherwise, it's always safer to put it below, okay, because you don't take what you want to take from the market. Okay, you take what the market gives you. Okay, so you put it slightly below, you have higher probability of it hitting. Of course, you miss out on the small bit that might eventually run out. Okay, but I think it will be I mean, you give yourself higher probability in terms of the trade itself. Okay, then the other one is when I explained earlier, okay, if you see a bearish movement, then you probably see another tap towards the resistance, dropping back down towards 170, 175. Okay, that's why I say, as of now, as of today itself, is still kind of like a range bound area. Okay, but we just have to see how they're going to close off for the week itself. Okay, next one I will go into Apple. Okay, Apple. Okay, hang on, let me just cancel all this. Okay, Apple, as of now, okay, same thing. Long term, definitely in a range bound area. Okay, but very strong recovery movements upwards, back towards 100, 160. Okay, 160. Okay, but currently, as of last week, it met with some supply level. Okay, so we are looking at rejection coming off. Okay, but short term, as long as they are holding above 150, 155 area, this box itself. Okay, why this box is important? Okay, they made a drop last year. Okay, I mean, last year itself range bound slightly towards the bearish side. Okay, earlier this part, earlier of 2023, they started moving bullishly. Okay, so but before they managed, I mean, before they started this down towards the lower low, okay, which is over here, right? What Apple did was they created. Hang on, let me just draw it nicely. Okay, before they started dropping to this lower low, they created this area of range from 150 towards 130 area, okay, as indicated by the box. Okay, so but in recent days, okay, 1 week, 2 week, right, Apple manages to really break away from this 155 level. Okay, so as long as price can continue to stay above this 150, okay, what I'm looking at is they will attempt towards this 160, 165 range again. Okay, anything higher, I think we really have to see how it start running. Okay, with price action. Okay, and also same thing. You see, you have one earnings coming out. Okay, talking about earnings, I want to share slightly more on what Justin shared earlier on Shredder. Okay, I think, yes, Shredder wise, right, you basically you open a long call, long put. Okay, so you try to catch the both sides from earnings or data release. Okay, but I think if the price is stuck in a range itself, okay, you will have a lot. You will have more difficulty really trying to hit away from. Hit towards the resistance of support, okay? Because if the price were to be in the middle of a range, yeah, you have both sides, so probability wise is not as strong, okay? Even if they were to run out, right, you will need a lot of volume because you need volatility to really get out of a range area, okay? So if they run towards earnings or a major data release period, right, I think a better strategy would be at the resistance itself, okay, at the supply level or at the demand area. Okay, that will give you more volatility when the price really starts to run, right? That's my personal opinion itself, okay, based on how price action will move when they are stuck in a range or when they start running out of it. Okay, so with this, circling back to this 150, 155 area, as long as Apple can hold, generally, I think it will just continue back towards 165, even maybe 170. Okay, whether any more move, right? I think for now, you really have to have the whole market pushing together, earnings wise coming up soon. So far have been looking quite good, their earnings, all right, but we shall see. Okay, so next one, let's talk about Amazon. Okay, Amazon. Okay, this one very simple to see. Okay, straight up is a range bound area. All right. So, but interestingly, they managed to tap off 88.90 level. Okay, so they are showing more signs of bullishness in Amazon itself. Okay, with this bullishness coming up, okay, as long as they continue to stay above 90, okay, I'm not saying that they won't come back down to tap into this 90 level. Okay, but as long as they can stay within this range, right, this new range that they are trying to form, okay, the probability of them breaking towards the higher end, okay, going bullishly, will be higher, okay, because this movement itself, we are coming off a lower low at 80, okay, which was formed early this year. Subsequently, we see a gap up, okay, from earnings itself towards a 115 area, okay, so we have a lower low, higher, lower low, higher higher, basically of this last range area itself. Okay, so what I'm looking at is as long as price continues to hold a higher low with a higher high, okay, we should see price moving higher from here. Okay, so back to the context of options. All right, so it's either you wait for price to come back down to tap into the 90 level with a strike towards 100. Okay, if short dated, you have earnings coming up, yes, I think if price were to come down here, this 100 level should be easily tapped. All right, but otherwise is subsequently just wait for the price to go above a 103, okay, then look for a long call towards the higher, towards like 115, 120 area for the strike. Okay, long put wise, I mean personally, I don't see any bearishness in this pair yet, okay. Of course, if you are looking into even shorter term, right, like weekly or even intraday, right, then of course you might see some movement downwards first before the move come. Okay. Okay, next one, Google. Okay, hang on. Okay, the levels wise are still intact. Let me just remove all these drawings from last time. Okay, so Google, same thing, range bound. Okay, I think we are looking at a lot of pairs being range bound now. Okay, but range bound, not saying that it's not a good thing. Okay, they range bound towards the supply area with earnings coming out, right? A little bit of good news, you will see the price start flying away. Okay, flying higher basically. Okay, Google, just take note. Okay, we have another level at 120. Okay, 120. So price will just probably be stuck in these two area itself. Okay, provided they get out of it. Okay, any short-term area, they should be tapping into 95 first. All right. Hang on, let me just draw. Okay, 95. Test 105 again, and subsequently continue this movement. All right, so anything to go towards the bearish side, short term wise, yes. Okay, long term, I think it's best to just wait for the bullish movement to come. Okay, because if you were to look for the bearish movement as of now, right, looking at this chart itself, yes, we have bearishness for the past 2 days. Okay, but generally, most of the techs are still running quite all right for the start. Start of 2023. Okay, so your bear side might not be, you might not have enough room, okay, room of like your risk to reward, right? The room might not be sufficient for you to really want to take the risk itself. Okay, so I think it's best to just really wait for the bullish movement to come stronger. Okay, then Okay, I will just go to Netflix now. Netflix, hang on, let me just delete the drawing again. Okay, levels wise, still intact. Price tap into 282, okay, 283. Okay, subsequently, as of now, 320, 330 area. Okay, rejection is shown at 340, but considering how Netflix has been moving, previous gap down has been covered. Okay, so as long as this 290, 280 level, right, it continues to hold, right, we just, okay, not that we just lah, okay, we would love to see a higher high being formed here, okay, because we can generally just take this low as a lower, higher low already. Okay, so once you see a higher high being formed, right, basically the pair will just run off the level. Okay, it's either back at 340 once they breaks it, or at 380. Okay, so same thing lah. I mean, short term wise, yes, we might have bearishness coming in back towards a 290, 280 level. Okay, but if you are looking past the earnings period, right, towards the 2 to 3 months, I think it will be best to look at the bullish side of it. Okay, then I will just throw in another NVIDIA. Okay, then we will see. Okay, NVIDIA. Okay, recently price again. I mean, this is they tap into it, but I won't take it as they attempted to really try breaking. Okay, it's just they just tap into the price of 270, 275. Okay, with this, right, this one, I mean, NVIDIA itself has been running quite bullishly. Okay, so we are looking at a lot of momentum coming in. Okay, but just to take note, because for a bullish momentum, right, I mean, you will always have this higher low being formed. Okay, so it really depends whether you are on an intraday, or are you doing a swing, okay, or are you holding it out for long term, right? All these will take into I mean, all these are factors that you need to take into consideration. Okay, short term wise, NVIDIA potentially might still tap back into 250 or maybe even lower at 230 before continuing to this 275 level again. Okay, so looking at the chart itself, bullish run is still very clean. Okay, still running strongly lah. Okay, with series of higher high, higher lows. Okay, supply levels are getting taken away. Okay, so now we just have to see if this current 250 price that they attempted to take away, all right, will it be, I mean, whether the market sentiments will be strong enough to really hold price back above 280 level. Okay, so options wise, same thing lah. You see, you have this earnings coming up. Okay, price, if the price is to come, I mean, if the price closer to earnings, right, they are running back towards the resistance area. Okay, I'm not saying there's no short in all this, okay, but I mean, it's always a trade-off, right? Because you always want to take into account the risk reward. Okay, maybe the short itself, okay, then again, I need to say again, I need to clarify. Okay, I'm not saying that this guy might not come all the way down. Okay, I'm not saying that. Okay, but as of how the price action is moving as of now, okay, short term wise, I would just look at it as a bullish movement. Okay, as long as the market is still showing bullish signs, right? Okay, in terms of the counter itself, there's no reason for you to fight towards the opposite direction. Okay, so short term wise, coming back down, yes, possible. Okay, tapping into 230, 250 level. Okay, then subsequently looking to whack this 280. Okay, make this 280 disappear, then we might see more. Okay, so if you look at it in options context, okay, it's either you go and do a short dated long put away here, okay, with strike at 230, 240. Okay, otherwise towards earnings, if you see price come back already, and they are generally just moving higher, right? Okay, yeah, then I mean, it's all the strategy like Justin mentioned. Okay, you might have a straddle which you buy at the point itself. Okay, otherwise you can look for price. I mean, you can look for a long call with price with your strike at 275 for the earnings to play out. Okay, because I just want to say again, okay, earnings release, major data like NFP, FOMC, CPI, all this, right? They will have a very huge volatility coming into the market. Okay, cash flow basically. Okay, the funds are flowing around. With huge volatility, huge volume, that's how a range will get broken away. Okay, without these two, right, basically it will just be dancing in the range. Okay, like cha-cha, right? So with that, let me see if any counters that I need to look at. Okay, so okay, I think with that, right, I think I will end this technical analysis portion. Okay, we will just jump straight into Q&A. Okay, I think many of you have questions with regards to this option. Okay, so I will give the time to Xiong and Justin to go through on the Q&A. All right, thank you everyone for the time.
Okay, hey guys, I'm back. Okay, let's see what questions do we have. Okay, all right, Q&A session. I believe there are a few questions. Okay. Paul, I think you asked, does it mean that Phillip already has a platform to trade options, Poems, or a new platform name? I think first of all, we gotta use Poems because Poems is still the best, I guess. Okay, give me a second. I think there's a lot of questions on options coming to. Okay, so I think Greedy Black also mentioned this, which I'll answer live. Give me a second. Okay, so all I can say is that options will be coming soon to Poems, but I won't give an exact date. Yeah, so you can stay tuned. We have newsletter, news announcements, so do have them checked. If not, always clarify with your trading reps. So stay tuned, it's all I can say. Okay, so next, what do we have? Anonymous attendee, you asked that the, okay, give me a second. You asked that for stocks which are moving in a range, what is the best? Options has a lot of different strategies, but if you're judging, or rather if you're going through what we went through today, the 4 basic strategy, I would say for range bound, covered call would be better. By selling off call options, you will actually gain the premium, and then of course you will have to hold the shares, and that will be the downside will be your risk. So if it's range bound and there's not much movement, you will definitely get the premium. Yeah, that you sold the call. So I think that would be a decent strategy to use. But other than that, of course, there are other different strategies that maybe other traders, other investors are using. So just to relate it to what we went through today, covered call will be the choice. Okay. Okay. What is the platform for options? Is it only for accredited investors? Okay, so anonymous attendee. No, sorry, for what is the platform for options? So yeah, like I mentioned, options will be coming to Poems soon. Do stay tuned to our announcement and newsletter. Okay, what else? Okay, so if you got any questions, you can always call the night desk, or you can contact our Poems trading representative. And yes, so you can actually follow up with them on any inquiries, and of course tell them that that you are looking out for options in the futures. Then maybe your own remisers can actually inform you if options actually on the release date. So do look out for any more future options webinars which we will be providing. Give me a second. I think there's more question. Okay, so Greedy Black, you mentioned you want advanced option strategies. Yes, we will look into that in future options. But today is just a very introductory, fundamental outlook to this options trading to actually pick your interest. So I believe if you are if you are already into trading, do stay tuned to our future options webinar. I hope that it will help you greatly. So at the end of this, this recording will actually be online on YouTube. If you have any questions, you can always go back to check. If not, do contact your trading reps for any questions, or contact Night Desk. We'll be glad to help you out. So with that, we'll end the webinar here. So thank you for your time. Thanks for taking your evening off and coming over to this webinar. So thank you guys. Have a good day. Cheers.